building.
Yeah, I don't think Trump actually truly wants to fire Powell. I think he wants Powell there as a fall guy in case the economy does weaken, to have someone to blame. So he'll continue to hammer Powell on social media. But my guess is that Powell will still stay in his current role until his term expires. I mean, yes, I think the worry around Fed independence is critical. It's real, but it's also kind of a longer term concern because there's just a lot of institutional stability in how the Fed operates. The Senate would have to confirm any new appointee. There's a rollover period in terms of the Fed Board of Governors, the FOMC. Trump doesn't have enough time in his term to change the composition of the board.
Are you concerned when you've got Secretary Bessent talking not so much about the renovation of the Eccles building, right, but about renovating the way that the Fed conducts business and monetary policy? I mean, this is a little bit worrying here, and at least part of it has got to be looking ahead to what happens next year, right, when you've probably got, I think, a total of 4 seats vacant, right, which raises the prospect of a majority of the FOMC being more or less of the president's people.
Yeah, I think that there are constraints to what Trump can do. If Trump starts appointing yes men, people who are just going to cut rates regardless of what impact this has on inflation, you're going to see long-term bond yields rise. And if long-term bond yields rise, mortgage rates will rise, and no one wants higher mortgage rates. So this kind of does limit what Trump can do with the Fed.
Yeah, it's really not ahead of midterms as well. Sherry?
Yeah, it may not be politically 100% correct to say this, but isn't the Fed already sort of impaired, the independence of it de facto impaired? Because, whether he gets fired or not, or whether Mr. Powell ends up resigning himself or not, President Trump is already trying to sort of mute the Fed. And the market is talking more about the big, beautiful bill or the tariff negotiations and the deals that are getting done, instead of the fact that the Fed is sitting tight for now. So perhaps that could actually, that kind of dynamic could actually get the market higher in the second half of this year. What do you think, Peter?
And let me piggyback on that question, right? You've got the whole issue of Fed independence, you've got tariffs, you've got conflicts going on around the world still, right? And yet, when you take a look at rates, right, the average for this year has been 4.40. We're below that. Mm-hmm. What gives?
Well, I mean, the question is what would have happened if we had a different economic environment? I mean, the Fed has been cutting rates. Normally, you would have thought that bond yields would fall. They haven't fallen because you have concerns over fiscal issues. You have concerns that foreigners are not going to be buying as many bonds because they're protesting, silently perhaps, the tariffs by shifting their assets elsewhere. So I do worry that right now, the fact that bond yields are 4.5% is hurting the economy. It's certainly hurting the housing market. The housing market is the most leading part of the economy, and it's going from weak to weaker.
And I know that Mag 7, that grouping is showing some cracks at the moment, so we might end up with a fewer magnificent stocks. But just because President Trump has spent some time this morning talking about the country's AI vision and so on, I keep thinking this the dollar story, the softness in the dollar, that's got to be a fantastic backdrop for this earnings season for big techs because they earn a lot from outside of the U.S. So do you still see a story there, and do you see a play there?
Yeah, so the dollar's behavior this year has been very interesting. While the stock market has shrugged off tariffs, the dollar has not. The dollar began to weaken right after Liberation Day and remains fairly weak just in the most recent period. Now, it's looking to find some sort of floor, but nevertheless, it's certainly the case that the dollar is telling us that these questions around U.S. exceptionalism have not gone away, and ultimately that could ricochet back into stocks and other assets.